Hello traders and welcome to my video on the 1, 2, 3 pattern indicator. In this video I'm going to show you how you can use this indicator to help you capture trends and gather some pips on any traded instrument and any chart time frame using a simple strategy with this indicator. So here you can see I am using the MT4, the MetaTrader 4 trading platform. I have the 1, 2, 3 pattern indicator already attached to the chart here. Okay, so what it does is it marks the high and the low along with the Fibonacci levels, okay? And this is just my way to interpret it and how I would trade it, okay? It may not necessarily be how everybody else would, but I find this is what works best using the 1, 2, 3 pattern indicator. Is relatively easy to understand. This is the euro dollar 1 hour chart here. I prefer to trade higher chart time frames, so the 1 hour, the 4 hour, daily, weekly, monthly, simply because they contain more price data and therefore I find signals tend to be more reliable. And that applies not just to the 1, 2, 3 pattern indicator, but to technical indicators in general, along with price action, support resistance, candlestick patterns just seem to be more reliable when there's more data involved. I'd much rather spend less time chart watching and capture some big moves and trying to scalp a few pips here and there all day long on the 1 minute and 5 minute charts. But each to their own. You can use this strategy on any chart time frame, and as I said, any traded instruments, so forex, crypto, stocks, commodities, indices, etc. Okay, well, enough waffling. I shall get onto the strategy. So the first thing to do is we look for a trend. Okay, we see that we've just come from this downwards trend here. And the market has started to make higher lows. Okay, so we're expecting perhaps a turn to the upside. The 1, 2, 3 indicator, it marks the lows and the highs for us. And then what I look to do is to enter first of all, these Fibonacci levels here. Can you see these levels? Okay, these yellow lines, these are the Fibonacci levels, which are conveniently displayed for you by the indicator, which I think is good because the Fibonacci tool, sometimes traders aren't sure where to draw their levels. So an advantage of the indicator is that it'll automatically draw the Fibonacci levels for you based on the lows and the highs. However, disadvantage is that it can be open to interpretation. Okay, so what may be a lower high for one trader may not be the lower high for another trader. Okay, for example, the low and high is marked here. Okay, whereas another trader might have already marked here the high and here the low and be trading off those levels. Okay, so it's open to interpretation, but if we just trade it as is, so this is how the indicator displayed the levels as soon as it was attached to the chart. And then what I look to do is how price reacts around the Fibonacci levels. Okay, so I'm treating it as support and resistance. And as we know, the market is making higher lows. What we're looking to do is buy. We're not going to sell. Okay, despite this being an overall downtrend. I mean, we're on a pullback now. We could always just wait for price to break below this level for a trend continuation. Okay. However, we are seeing higher lows, as I said. We've got some bullish price action here. Okay, so the market is slowly heading upwards, although we are approaching resistance around here, which is what this level suggesting. So we can bear that in mind. So how I would have traded this, as you can see here, when the price started to move away from this low and continue upwards, okay, a breakout of this Fibonacci level here would have been an entry point. Okay, so we could have entered within this uptrend, whether you want to look at the higher lows there, or we can just draw it more immediate like so. Okay, higher lows, market's going upwards. 1 hour chart, so there's plenty of data available within there. Bullish candlestick patterns, and you could have traded on the breakout of that fib level there. Okay, and you can see it would have been a good trade. And then as we approach the first Fibonacci target here, you could have moved stop loss to break even. Okay, just locked in the trade. We don't want winning trades to turn into losing trades. You could have even closed part of the position if you wanted to, or just move the stop loss at least to break even. And then as the price continues upwards, we're going to see if we can target this fib level here. Okay, and then if price does reach there, we can again move the stop loss to the next fib level, just lock in this profit there. Okay, and again, consider closing part of the position if you wish. It'd be interesting to see what happens around here, just because we've got this resistance level. Okay, so perhaps even now you could consider moving the stop loss to this level here. It doesn't necessarily have to be when price reaches the fib. If it gets close enough or you see the price starts to turn around, you can close the position or just move the stop loss. Okay, because we can see that we've got some lower highs going on here at the moment, so it may signal a move to the downside. But we could also have the continuation of this trend that we're seeing now, especially considering we're around the London Open now. So there's plenty of liquidity and volatility coming into the market. Traders are probably switching on their charts, seeing this move upwards and looking to jump in. But we'll still bear in mind this resistance level here, and of course the Fibonacci level. If price does breach this level here, okay, we definitely want to lock in the trade for a good amount of profit if it does turn around, and then we can shoot for this level up here. On long term, just keep in mind this particular resistance level. Okay, but the indicator will redraw when it deems necessary as well. Okay, so that can keep you up to date with the latest market movements. In terms of stop loss, okay, we take the breakout here of this level. It's worth mentioning as well, you don't necessarily have to take the first breakout here. Okay, you could take, you know, a breakout of this level, breakout of this level, and if you don't want to take the breakouts, you can take the pullbacks. You know, after the breakout here, we didn't actually have a pullback to this line, but sometimes you'll have a breakout, okay, then the price will return and then the line will hold up as support. Then you can look to enter on a pullback and a continuation that way. Okay, so the market's really moving now. This would have been a good trade. Stop loss, had you taken that breakout, I would have placed stop loss on the previous fib level. So just there, which is relatively tight for the 1 hour chart time frame, or you could have placed it just below the low here, which again is still a really tight stop loss. By trailing the position, we can capture as much pips as possible. I wouldn't panic and exit as soon as we see a big candle like this. We want to try and, you know, let our winning trades run and cut our losing trades short. Obviously have good discipline, good trade discipline. Don't let negative emotions such as fear, anger and greed get in the way. Don't revenge trade. Don't fear of missing out. You know, maybe don't want to buy now because you've already had this big move upwards. You don't want to buy at the top. Okay, you could wait for another pullback. There will eventually be one, and either buy then or wait to see a price, you know, falls if the pullback doesn't have a continuation. Okay, so a relatively simple strategy. It just requires sensible money management, good discipline, stick to the trading plan, and you can capture some good moves with the 1, 2, 3 pattern indicator. Okay, well, thank you for watching. Hopefully you've found some ideas that you can implement within your own trading strategy. The same methodology I'd apply when taking short or sell trades. Okay, so thank you for watching. Please like and subscribe, and I'll catch you on the next one.